Good afternoon, everybody. Thanks for joining us for 23 Databases in 50 Minutes. My name is David Fine, the CEO of ValueSource. We've spent the last, it's hard to believe, but spent the last 40 years working on automating the valuation process with software, data, and technology. And today's webinar is a kind of a very fast go through of 23 very important databases in the valuation space. These are the databases that we're covering. There's quite a lot of them, so we're going to be moving relatively quickly. The goal today is to give you a taste of these databases, what the data is about, where it's used, some of the strengths and weaknesses, just so you have a sense. Obviously, it's not a deep dive into any of them. There's way too many. We could spend all day on these kind of things. But I think you'll find, hopefully you'll learn two or three things about some of the databases that you don't know, and hopefully it'll be a good resource for you. These databases come bundled in ValueSource's BV Data World. You can see this chart shows you which databases are available where. And the main database that we have that includes everything is Titanium. And then there's a couple of add-on databases too, First Research, BizMiner, and RC Reports. And our goal today is to get through all of them. So buckle up. The other thing I wanted to just let you know about is BV Data University. We're excited about it. It was just launched. ValueSource's niche in the valuation space is data, technology, and automation. And we feel like there's sort of a gap in the industry. There's a lot of incredible information and a lot of organizations that produce that information about valuation theory. There's webinars, there's conferences, all sorts of great stuff. But data seems to be a hit or miss thing. BV Data University gives you a resource to take a look at. There's over 100 valuation databases in there, and it has a general description of the databases, some interesting information where the data comes from, where it's used, where you can buy it. So if you're looking for data on any specific thing in the valuation space, I encourage you to check it out at www.bvdatauniversity.com. And this is just the launch of it. It'll be growing. Eventually, we'll have courses on there on all these databases so that we can help you get educated on how to use them. So before we start the database review, I just want you to think about data and think about credibility. Every database that you use in valuation, this is an important piece. And every database has strengths and weaknesses, and it's just important to know what they are. Is it relatable to your individual case? Is it replicable? In other words, can another evaluator reproduce the results in evaluation? Is there sufficient information? Is it complete? Is it consistent with your fact pattern? Is it relevant? Is the data relevant to your specific fact pattern, your engagement? So keep that in mind. It's a question that you always want to be asking when you're thinking about data. The first database we're going to cover is the National Economic Review. BV Data World has been publishing this for a very long time. And it covers things like growth, employment, national budget, debt, stocks, productivity, and more. And also sort of dives under the hood to take a look at what's driving the numbers, what lies ahead, forecasts. It was created by Kevin Hopkins, who's an economist. He's got kind of an interesting story. He was an economist in the Reagan White House many, many years ago. And he's been doing this kind of work since then. It's delivered monthly. It's archived back to 2010. Starting in 1993, it was quarterly. And there's 48 economic data sources covering 12 subsets of data like growth, employment, inflation. One interesting note with the government shutdown, this data is not available, so we're going to have to wait a little bit for the September National Economic Report to come out. And I'll actually show you how all of these work. This is BV Data World. This is National Economic Report, and you can see there is a list going down from August was our last one all the way back. You can search by year if you want to. If you just want to look at years, you can search on this. But let's pick January. Every month it comes out, but every quarter there's a bigger one. So January is a larger one. You can click on the doc file or the PDF file. Let's take a look at the PDF. And the table of contents gives us a pretty good idea of what's covered in here. So general economic indicators, GDP, employment across a number of different sectors, financial markets, interesting, crypto is in here now, financial interest rates, government, business, and industry. And it goes into a lot of detail about all of these different kinds of things. So it's a great resource. And it was really interesting. Actually, we're heading to Jim Hitchner at the AICPA conference in Denver a couple of days ago, and he reminded me he did a review of this, and his biggest complaint was there were no footnotes. So if you look at the bottom of this now, you'll see a ton of footnotes about every little piece of data in here. So thank you, Jim, for prodding us into taking this economic report to the next level. There also is an XLS file in here that has all the data in it. So let's take a look at that. And here's a table of contents of all of the different data included in these views. And you can click on the views and get there, or you can just click along the tabs at the bottom. So the National Economic Report provides a ton of data, both sort of qualitative narrative about this, as well as the underlying data pulled from federal sources and other sources about all these kind of demographics. So it's a great source for economic data. One of the things that I encourage you to do too with these kind of things is think about how these things apply. I actually want to set up some webinars on this exact topic. Like if you have an economic report or a geographic report, how do you actually tie that to the valuation? Obviously, you're using your subjective expertise to do that. We're trying to create some more content around what does that really look like in terms of how do you take economic data and apply it to cash flows and or risk in evaluation. So the next database we want to cover is ValueSource Market Comps. This has got kind of an interesting history. This was originally the IBA data, which was founded in 1978. And Ray Miles began collecting comps for IBA members back at that time. He was an engineer by training, and he wanted something more than rules of thumb to come up with values. So he started collecting comps, and he's the one that really kicked this off for the entire industry. The IBA was acquired by a combination of NACFA and ValueSource in 2008. The IBA merged into NACFA in July of 2012, and this data is now called ValueSource Market Comps. The data is collected from business brokers. And one of the things I'll say with all of these databases, really pay attention to definitions. They're key. For example, what do you have to add back to the multiples in a comp database to get equity value? Different databases have different definitions. You have to add things back differently. When you talk to instructors and people that have been around for a while, they'll tell you that this is a big source of mistakes, and just make sure you don't make those kind of simple mistakes. There's over 49,000 transactions covering 800 SIC codes. 43% of them are all cash. 85% of them were a purchase price of less than $500,000. The mean sales price is about $930,000. Most of the transactions involve a brokerage fee. Now, this is interesting. The sales price range from 29 to 68% of revenue, and 1.7 to 2.7 times SDE, or seller discretionary earnings. And that's from the 25th percentile to the 75th percentile. Just gives you a kind of roadmap to value. Now, these are asset values. It's operating assets plus goodwill. It excludes real estate and excludes inventory as well. So that's an important thing to know. So let's take a look at ValueSource Market Comps. Now, we recently updated this, in the last 6 months. There was a bunch of new enhancements to this. You'll notice NAICS codes are now available in here. And you can also put in not the full SIC code, like SIC code's 4 digits, NAICS codes are 6 digits. You can put in a 2-digit SIC code or a 3-digit NAICS code, and it'll give you general kinds of searching, which is great. The other thing we added here under search is search criteria. You can have search all or search any. So that's really an and or an or. So it gives you a little more flexibility in searching. And those are for the main kind of things. So if you're looking for example, a SIC code of 5812 and you want a description of pizza, which let me just type that in, we'll take a look, 5812 and pizza, and we do an all criteria, you'll notice you'll see 5812 with pizza. If we did or, you'd see either 5812 or pizza. The other kinds of things that we updated in here are you can now download up to 300 records. It's not limited to 6 NAICS or SIC codes. Another thing that we put in here that people were asking for is you can save queries. So if you want to save a query for a specific engagement or a specific set of criteria you have, you can save them and then load them. Like here's one for pizza restaurants and that we did before that you can open up. The detail view has been substantially improved. There's a lot more clarity here, especially the transaction details, taking a look at the proceeds to seller and the things that are included in the proceeds to seller. In other words, inventory, receivables, and real estate are not included in the price definition, but those things will go to a seller if they're included in the deal. So there's a lot more clean data presentation. We also validated price accuracy, ensuring that real estate inventory and AR was not in it. We added a discretionary earnings to revenue percentage, which is sort of like a profitability. And we also added a MARS search, or a multi-attribute rank search, which is kind of a cool thing. It lets you put in some specific criteria, and it does a statistical search on the data. Let's take a quick look how that works. And you'll see that there's results here, and these are all showing green, which means they're ranked 100. What that means is the SIC code matches 100%, the revenue is matching 100%. I didn't pick state or a description in here, but this gives you a way to search through data that is a statistical approach rather than you putting in criteria. Obviously, you can put in all the criteria here. You can also export this data. You can export this data to just a raw data file. There's an analysis file, which gives you some great scatter plots. And there's also an equity valuation here, which most people don't know about. You can put in a summary income statement and balance sheet and do a very simple market-based equity appraisal right here in the program, which is kind of great. Okay, let's skip on to the next one. ValueSource M&A comps. Now, ValueSource market comps are mostly companies under $1 million, where the data is collected from brokers. M&A comps is from SEC data. It's 8K data. So it's public companies buying private companies' data. There's about 17,000 transactions from 2010. And the sales range of these deals are between $1 and $250 million. You get the name of the deal participant, seller description. It includes the full year financial statements and deal terms if they exist. There's both stock and cash sales in here. And this data is powered by Tagnify data. So let's take a quick look at that. It's a comps database, so it's very similar to all the transaction databases. You put in search criteria, and remember, there's a standard tab and a detailed tab on these, so you can put in detailed kinds of searchings. This is the sale date, begin and end, how much was the sales price, EBITDA price, etc. And then also there's some multiples you can put in here too for high to low. You can search. You can also tell it you want to see records with multiples, without multiples, or all of them. And once again, let's just put in something pretty simple in here. We'll put in 5812, which is restaurants. And we'll type search, and we'll get all of the restaurants. Once again, there's analysis in here. Let me see if I have this in Excel already. I'll just export this. Most of these databases you can export in one or two different ways. Oops. So this is the database. You'll also notice when you export these things, there's macros in here. And when you export any file from the internet, it doesn't work. So you have to go into File Manager, right-click on it, go to Properties, and say Unlock to get the data in here. And let me just do that really quick and reopen it so we can see all of this stuff. Many of our downloads have macros in them. So you can now see there's a ribbon on here that lets you do a lot of interesting things. Here's the raw data. You can set some criteria for excluding things, and also data ranges for some of the different multiples. Here's all the data that you've selected. Here's some general stats, statistics for all transactions. Here's statistics for the ones you've selected. And then there's a ton of data in here. There's probably a dozen charts that you can go through here and look at all this kind of data. So once again, M&A comps are comps that are between $1 and $250 million. They are coming from 8K data, and it gives you that upper range. People always ask us, how does this stuff compare to Deal Stats? Deal Stats decided to include all of the different comps data into one database, Deal Stats. So they have both the smaller comps from brokers as well as the 8K data in one database. We decided to separate it out. But the 8K data is the same kind of data and the same kind of ranges, and the broker data is also the same. So the combination of VS M&A comps and market comps is comparable data ranges and sizes to Deal Stats. So let's take a look at BizComps. Jack Sanders created this in 1990. The data actually is published through ValueSource and BB Data World. The people that provide him comps get their data from us. And it was actually the first database to download into ValueSource software in the middle 80s. I knew Jack for a long time. Sorry, he passed away last year. He was a good friend and a good partner to ValueSource. There's 12,000 transactions over the last 10 years. Once again, BizComps and ValueSource market comps are very similar. It's the same kind of data with the same ranges collected from kind of the same people. In BizComps, 82% were for a purchase price of less than $500,000. The mean sales price was $393,000. Once again, I'm always interested in the valuation roadmap that data provides us. In other words, sales price ranges similar to VS market comps, 27% to 68% of revenue, and 1.3 times to 2.57 times seller discretionary earnings. Once again, that's like the 25th percentile to the 75th percentile. And if we go take a look at BizComps, it's very similar to VS market comps. So I'm not going to spend much time on it. Same kind of thing. You put in SIC codes, NAIC codes, descriptions, search for data, download either into the data file or the analysis file, which gives you some analytical tools to help you get your arms around those numbers. So Guideline Public Company, this data is provided by Tagnify, and you can select up to 20 companies and download income statements, balance sheets, cash flows, ratios based on annually, quarterly, year-to-date, and trailing 12-month timeframes. And there's two major downloads in this. It's multiples as well as fundamental data. And let's take a quick look at that. Now, the question here obviously is, when is guideline company data appropriate? I think the standards in most of the standards talk about needing to at least look at guideline public company data. The trick is obviously public companies are very large, and most of the time we're valuing companies that are not nearly that large. But this gives you a quick and easy way to take a look at what data is out there. So once again, let's take a look at 5812 restaurants, and we'll put in a valuation date. 1/1/2020, 1/2020. Now, this is an interesting field here. Valuation date, obviously, you're looking for data that was known or knowable on that valuation date. The cutoff date is whether you're willing to accept filings that were published after the valuation date, but contain data as of the valuation date. If you want those the same, you can put those the same. So this gives us a list of companies. And then there's two different downloads here. You select the individual public companies that you want, and then you can download fundamentals and multiples. But let me just download some ones that already were downloaded because they take a while to download. So here's what the multiples spreadsheet looks like. So on there, you can pick a certain things like, what kind of data you're trying to download. Is it trailing 12 months? Is it last year? Those kind of things. And the data that you get is income statement, balance sheet, cash flow, and a ratio analysis. And you'll see at the bottom, there's tabs for each one of these things. So you can click on the individual tabs, or you can come here and click on the link, and it will take you to the same place. So what you have here is, let's take a look at an income statement, a full income statement that's published by, it's the SEC filings for this company. This data comes from Tagnify, so they do all of the cleaning and sort of research to make sure that these are clean and make sense for valuators. The next one is the balance sheet, same kind of thing. You get a full balance sheet, you get a full cash flow, and then you also get ratios. So some people I know use the ratios. You can use these ratios to benchmark against companies. Once again, just realize these are public company ratios, and then you need to think about, does the size of the company have an impact in terms of, are these ratios, comparable? It goes back to that first slide. Are they comparable to a smaller public company? The other thing that you get out of this is multiples. So this is the multiple spreadsheet. And you get multiples for each individual company. There's an input sheet here where you can put in your data for the company that you're looking at. Here's summary year-end data for all of them. Here's trailing 12 months for all the ticker symbols you downloaded. And then here is the ticker symbol for the first company. And it's kind of interesting here. Tagenify gives us common shares. So when you're trying to come up with an NVIC number, you can either use this as sort of an estimate. Tagenify does not have the detailed equity pieces in there. In other words, common A, B, preferred A and B. So if you want, you can go find those. It's easy to go look those up. They're available in a bunch of different places. So if you want a more precise NVIC out of here, you can put that in yourself. If you're just looking for, sort of a gut level number, you can use the common stock and it will create an NVIC for you. And as you scroll down to the bottom, you'll see, NVIC divided by sales, NVIC divided by EBITDA, EBIT, tangible book value, and gross profit. So these give you some valuation multiples. Once again, these are public, so you have to pay attention to, how does that compare to a much smaller private company? But we'll leave that up to your expertise to figure out all of that detail. ValueSource financial ratios. This is based on IRS data. It covers about 250 industries and 13 asset categories. The great thing about IRS data, it's based on 5 million corporate tax returns. So when you're talking about sample size and statistical validity, this nails it. We talked in the beginning about strengths and weaknesses. That's a big strength of this database. One of the weaknesses or things you need to know about. The data is not published for 3 years. In other words, the most recent data is 3 years old, so you have to take that into account. It's formatted the same way. If you're familiar with RMA annual statement studies, it's formatted the exact same way with ratios and common size income statement and balance sheets. One of the cool things about this is it's got 10 years of data in it. So it's great for industry trends. If you want to take a look at, for example, profitability of an industry over the last 10 years, you can do that with this. One of the things just to note, there's a lot of financial statement benchmarking data out there that use IRS data as one of their bases, and then they use forecast and modeling to provide the data. It just, once again, it's a good thing to know, where is the data coming from? How is it compiled? What is gone into making up that data, so you can make decisions about how appropriate and relatable that data is to use. So let's take a look at the IRS database. We get rid of these. Now, one of the things that's interesting about the IRS data is a number of years ago, when you look at this data, you'll see there's 13 asset categories. Before, I can't remember how many years ago, 4, 5, 6 years ago, they used to provide every asset category for every industry. But I think there were some complaints from some industries where there were not a lot of sample size, where they thought that providing every asset category was too close to individual companies. So the IRS agreed and decided to do something very different. So you'll notice this is single year worth of data. It's the most recent year. You can drop down here and go back to 1998 if you want to. And you can search by things by industry title or NAICS code. But if you go to the US total, you'll see all 13 of these asset categories. But as soon as you drop into an individual industry, you'll notice there's only the total. So in other words, these asset categories disappear. And one of the things that's interesting too, if we remember that some companies use IRS data as a foundation, for the last 6 years, there's only a total column. So that's an important thing to know. Now let's take a look at the multi-year analysis. This can be very handy. Once again, you can pick the first year of the data that you're using. You can pick either the most current year, and like I said, it's a few years in the past, or you can go back a couple of years, and then you can say, well, how many years do you want, and what asset range do you want? If we're using the total, You can pick asset ranges, but once again, you can look at things like, let's take a look at gross profit. You can take a look and see gross profit in this case has been pretty stable for 10 years. Operating expenses have been pretty, let's see, have they been stable over this time? But anyway, I think you get my point. It's relatively easy to get pretty significant industry trends based on millions of tax returns. Statistical validity is high. The number of records in this is gigantic. But once again, you're seeing these are the totals for year this is the U.S. total. If we go down to, let's take a look at an industry here. Let's pick an industry. For industries, you can do the same thing. Now, the most recent year is going to be, you'll see this only goes to, let's go to the most recent one. And you'll see that you can get whatever 10-year period you want with a starting year. And if you don't want to do 10 years, you say 5 years is relevant, you can do that too. So most people don't realize this tool has that in it. Very helpful for looking at trends. RMA Valuation Edition. This is a great database. I really like this one. It's the Annual Statement Studies Plus. And what's the plus? It has 10 times more data than the Annual Statement Studies, either the book or the one that's available from RMA. You should know too, RMA merged with ProCite, so you'll be seeing the word ProCite. Instead of RMA, it's still called the Annual Statement Studies, but the company has now been called ProCite. There's national and regional data in here. The Valuation Edition is exclusive to us. We worked with them about 10 years ago to come up with this. We had been working with the MGMA for years, and they would publish in their manuals. And if you ever do healthcare valuations, MGMA has fabulous data. Their compensation survey to normalized physician comp, as well as their cost survey, which is an incredibly detailed financial statement benchmarking tool with hundreds of indicators. But they used to publish, and we helped them create benchmarking tools around every percentile from the 10 to the 90th. And what we learned from them is, if you can rank a company opposed to just doing general benchmarking, which I'll show you in a minute, it can be very helpful. So let's take a look and see what that means. Here's RMA Valuation Edition. And if you're familiar with RMA, this should look very similar. If you've been using the book for years and those are on your bookshelves like they're on our bookshelves, all this data is very similar. One of the things that we do that's kind of helpful is in the RMA book, at the bottom is the total sales and assets for every company in that category. Now that number is not so useful, but if you divide it by the number of companies, you can get some averages. For example, on this income statement, so we're in the asset section here, we're on national data. Once again, depending on what industry you're in, you can get national data or some regional data. And then here's the range. So here's asset data. Let's actually pick something here. Let's do, to see if we find certified. Here's certified public accountants. So you'll notice under assets, there's these different ranges. There are all the different regions for here. But you'll notice in this display under summary, you'll see net sales. This is the average sales for that range. So if we change that to 2 to 10 million, you'll see that pop up. And one little tip, Dave Miles, who's our chief valuation strategist guy here, says you can use assets to take a look at sales numbers because these are average sales. So normally if you went to sales, you'd see categories like, here's 5 to 10 million. But let's say your company is really 12 million. If you went to assets and saw, let's see how big these grow. The 2 to 10 million asset range is actually a $12 million average sales. So that may be a better fit. So once again, you can use assets to take a look at how sales works. You can do single year or multi-year in RMA, the same as IRS. So once again, you can get some really incredible trends out of this and take a look at things like gross profit over the years. It works the same way as IRS. You can put in the first year, the anchor year, and how many years you want. You can type in from a list or pick from the SIC code. But one of the things, let's go take a look at CPAs again. Search certified public accountants. Let's go take a look at income statements. Now the magic here is that 10 times more data. So let's take a look at the income statement and let's take a look at profit before taxes. And you'll notice, here we go. Let's do a single year. So we get the percentages. So you'll notice the average is the average which you'll see in the RMA book. or in the standard RMA annual statement studies. What we're showing you here is every percentile from 10 to 90. So what does this mean? It gives you the entire range, which gives you a much better feel for how your company compares to this data. And sometimes the data is very different. So in other words, if you look at like operating profit of this is a good example. Here's an operating profit of 8.4%. The 50th percentile is actually less than half than that. So you can, in our software, if you download the analysis here, you can type in an income statement and balance sheet. It'll download the data, and it'll show you where your company is performing against RMA norms. I'll show you what that looks like in our software. So here's an RMA page in our software, and you can see here's the company, here's the RMA data, or here's the percentage for the company, here's the RMA data, and then here's the ranking. This data is just sort of a sample data that's not real, so these numbers don't make sense. But you can see that the RMA will rank you, which means it becomes a much more precise kind of a ranking or a benchmark. Most benchmarks with most data is sort of a red light, yellow light, green light thing. You're either at the industry, above it, or below it. The question becomes, what does that really mean? If you're above the industry by some number or some percentage, how do you interpret that? Some data presents statistical kind of things showing you what the standard deviation is. That is a hard thing to get your arms around. But if you know the gross profit is at the 85th percentile of the industry norms, that's strong, and it's very strong. Or the flip side, it could be very weak. One thing to remember here is operating expenses, obviously, the higher they go, it's a bad thing. Profit, the higher it goes, is a good thing. So just kind of keep that in mind. But you can do a ranking and get a very clear picture. This is helpful for you to understand the strength of the company. Once again, you have to use your expertise and the fact pattern to say, okay, if I have a company that's very strong, how does that impact the measures of value in relationship to cash flows and risk? But once again, you have a much clearer picture using RMA Valuation Edition than you do using most other benchmarking tools. So it does the same thing with the balance sheet. So every balance sheet item, it's giving you every percentage from 10 to 90. But I think more than just numbers, it gives you a feel for what the industry is doing and where you fit in that industry. And I think it gives you a much more visceral sense besides just numbers. If you're in litigation, it's helpful to explain things. Explaining percentile is something that people understand. Everybody has a nephew, friend, daughter that took the SAT. The question is not what score you got. The question is what percentile were you? There's a smile on your face if it was at the 90th percentile, if it was the 30th percentile, they need tutoring. So this is exactly the same kind of way. The analysis in here lets you type in, let's just download that. So here is the data, and it lets you type in an income statement and a balance sheet so that it will do all of that analysis and ranking for you. If you typed in data in here, it will rank all of this stuff for you. And it does, once again, common size balance sheet trends. There's tons of charts in here. So once you download the data, there's a ton of stuff in here in terms of analysis that will help you get your arms around the financial strength or weakness of a company. Once again, if you're using our software, that's sort of automatic. You don't have to type any of that in because it's already typed in. And then ratios, the same thing. Obviously, in the book, it's giving you the 25th, the 50th, and the 75th percentile. Once again, here it's expanded to the 10th through the 90th percentile. So even in those ratios, it gives you a lot more specificity. So remember, the way you're searching here is sales or assets or historical. Remember, if you're looking at historical data, it's every asset category combined. If you're looking at sales, you can pick whatever regions are available, and it'll show you just the regions that are available for that data slice and whatever data slices are available. So RMA is a great benchmarking tool. The other thing about RMA is the data is 100% transparent. We have a case study on RMA, which I'd encourage you to look at. It talks about the history of RMA and the incredible rigor they go through in collecting this data. RMA is an association of banks. Banks are members. And when banks get loan applications, they submit them to RMA, but there is a process and training and standards for putting that data in. So the other thing to remember is not only do they have a rigorous process, but every single number that you see in RMA can be traced back to individual financial statements where they're doing averages or doing some math on it. So in other words, you know with absolute confidence that every number in RMA comes from collected financial statements and they're completely transparent. If you haven't read the front matter of the RMA book, it provides all that transparency, exactly what they're doing, as well as all of the definitions and data for where that stuff is coming from. So it's a great resource. So the next one we're going to is Kroll U.S. Cost of Capital. Many of you are using this. If you haven't seen the Kroll Navigator, it's a great tool. We actually had dinner with Carla Nunes and Jim Harrington from Kroll the other night at the AICPA conference, and they are a wealth of information. It's part of the reason why this data, I think, is so valuable. You really have thought leaders that are not only putting together the data, crunching the numbers, but providing providing very relevant and timely kinds of conversations about how things that are going on currently, how, for example, how do tariffs affect all this stuff? They're doing I think, a webinar on that relatively soon, and that's always good to understand. If you don't know Kroll data, there's really 3 different data sets. The first one's the U.S. cost of capital inputs. Those are sort of the main things that people are using for, CAPM models and build-up models. There's also the U.S. industry benchmarking data set, which I don't think enough people really use. It used to be, historically, it used to be the Morningstar's Cost of Capital Quarterly. It was published as a book, but it's a ton of information on individual industries. And Kroll has done webinars on how do you dovetail these things. In other words, how do you add U.S. industry benchmarking to give you more insights and help your credibility in justifying these discount rates that are so crucial to valuation. So I'd encourage you, if you haven't looked at industry benchmarking data, I'd encourage you to take a look at it because it's pretty interesting. And let's take a look here. Here's Cost of Capital Pro. Let's see if we can stay signed in here. Here's the Kroll dashboard. And there's a lot here. So if you haven't really played with this in a while, I would encourage you to play with it and take a look at what's here. This is the dashboard piece. So it's giving you some general information on the US cost of capital. Also, if you're doing international valuation, there's a lot of valuation data. Cost of equity inputs, this recently has been expanded to provide more and more data. In other words, besides giving you the tool to do the analysis, they're also providing the data that you can actually just look at and download. So once again, risk-free rates, equity risk premiums, size premiums, risk premiums over the risk-free rate. And then one of the big things they provide here is the calculator that allows you to actually put in data. And it does 2 things. One, it provides the right data all the way along the process. But the other thing that it does is it provides a best practice approach to creating accurate and precise cost of capital estimates. I always learn something when I talk to Carla or Kevin or Jim Harrington about this stuff. And this has the data, it has the tools, and also down here under resources, it has an incredible amount of documentation. If those of you that remember the old SBBI book or the SBBI Valuation Edition, it has all that kinds of stuff in it, so you can look and see what's happening. The default one is the CAPM plus price size premium. You can also click on the build-up method. And once again, here's where you're actually typing in numbers. So you can edit these things and pick specific kinds of drop downs. And once again, there's a lot of subtle valuation theory to this. And I encourage you to go through this thing, look at the resources, listen to Carla, listen to Roger, listen to Jim Harrington, because they have a lot of really great information on how you put all of these things together. This stuff downloads into PDF files. This stuff also downloads into our software if you're using our software, both the CAPM and build-up models. So there's a ton of stuff in here. There's a ton of data. I encourage you, if you haven't been through the Cost of Capital Navigator, if you haven't, most of us and do what we do with everything else. We use what we need and we don't play with the rest. I encourage you to dig in here and play because there's a lot of great information in here. So the next one we're going to look at is Plurus. It's the Plurus discounts for lack of marketability, or DLAM. It was developed by Espen Robach, and he wanted to create a customized defensible DLAM study. It's the largest restricted stock DLAM database out there. It's based on restricted stock private placement transactions. So if people are buying restricted stock, they're not marketable, and they're buying it at a discount because it's not marketable. And the concept here is that you can use those transactions to create a DLAM for a private company. Now, the cool thing about this is, there's obviously some studies, most of them are pretty dated, that talk about, DLAM statistics over time. The idea with this is you think about it like a comparable market database where you're looking for ratios, right? You're going in there and picking specific companies or specific transactions to do a comparison on. This is the exact same kind of idea. So since the database has actual transactions of restricted stock and private placements, you can create a study related to risk, size, liquidity that are driving the DLAM data here. So there's two different pieces to this. We actually have a manual, which we'd be happy to send you for free. This is our manual on Plurus, but it's much more than just how do you use the database. It's the theory behind it. So it's really like a whole course on the theory of restricted stock studies. How does it apply to DLAM? There's some interesting subtleties in here that are worth understanding. And this manual goes through the entire thing. It also has some pretty cool graphs in here about what average discounts are and median discounts, and how all of this stuff is calculated. So once again, at the end, I'll give you my email address. If you're interested in that, I'd be happy to send it to you. But there's two big things to know about this. There's two big pieces. There's the RSED, or the restricted stock equivalent discount, which is based on the restricted stock transaction data. But remember, this is public data. So then the question is there a difference because our companies are, smaller, and there may be a more significant lack of marketability or a greater illiquidity because we're a private company, and there's a PEDI, which is a private equity discount increment, which adjusts the RSED to reflect the greater illiquidity of private company shares. Together, these yield the DLAM. So let's take a quick look and see how this works. So once again, what we're doing here is we're going in and picking specific transactions. So you can either do it by industry or sector. There's a number of sectors in here, or you can go into the detailed search and pick things like volatility, market cap, revenue. You can get rid of all volume stocks. You can get rid of penny stocks. You can get rid of pink sheet stocks. You can get rid of warrants if you want. Do you want deals with warrants or not? You want large gaps or not? Restriction rights, all these kind of things. So you can build your custom, DLAM set of companies. And let's take a look and see what that looks like. So here's the DLAM export spreadsheet. And this is all the data. So you go in there and you're picking comps. And once again, you need to figure out what things are relevant. Is industry relevant? What other things are relevant? And then you've got some statistics on those comps. And then here's the RSED. So what you're doing is you're putting in some data for your company here. In other words, this is your subject company traits, and it's giving you an indication medium of the DLAM. You can weight those here. Once again, read that manual to understand the theory behind this and what kind of thought processes go behind these kind of assumptions. Maybe why would you want to weight thing more than the other? So the first piece of this is the data download that you did. So this is your custom list of companies that are comparable based on whatever criteria you pick. The second piece, and this one is showing there's 37 companies in this count. This one is all of the companies in the database that match the criteria. And then here is the reconciliation of methods. So here's the RSED from the data download, which you pick the companies. Here's the RSED from the entire company. Once again, you can weight them. You need to figure out what criteria makes sense. So here's the RSED restricted stock equivalent discount. And now we go into the PEDI, in other words, the private equity discount increment. Now there's some math going on in here. There's some theory going on here. I'm not even going to try and cover that today, but you can read that manual or just take a look at the kind of theory behind what how this data is used in computing DLOMs. But what you're really doing here is you're adding that private industry discount here. So what we're saying in this example, the PEDI or the private equity discount increment is 8.4%. And then the discount conclusion is you take the 16.7% from our initial one, we add the PEDI and we get 25%. And then there's all sorts of calculations in here, which you can, sort of look at if you're interested. But it's a great way to create a custom study. It's relevant. It's been shown to be accurate. If you've not seen the IRS guide to value to DLOMs, let's see. I think I might even have that here somewhere. I don't have that. The IRS publishes a guide on DLOMs. I encourage you to look at it. I don't think there's any one right way to do this, but there are different sources of data and different approaches, and this is certainly one of those approaches that is absolutely worth considering. So let's take a look at FactSet. FactSet provides an indicator of premiums and discounts for M&A transactions. There's 5 years of control premium data, and we provide summary data for 25 industries. Implied minority interest discounts are calculated in the valuation application. So let's just take a look at those. So here is the, where's the PE? Here's the PE ratios. So what you're getting here is these are the 25 industries, and we're giving you 5 years worth of data. And here are the different SIC codes for those industries. So once again, this is a ballpark thing to remember. It's a public company. So obviously you need to think about that in relating it to a private company transaction. And then price to earnings ratio, that was price to earnings ratios. I'll go back and show you the DLOMs in a second. So FactSet tracks formal transfers of ownership, at least 5% of common equity. The data sets are very similar. We just looked at price to earnings, which is here. Let's take a look at premiums and discounts. So this is the exact same idea, but in this case, you're getting premiums and discounts. Once again, these are public transactions, so you have to take that into account. Around the valuation world, is a great news, sort of a monthly news thing. It was actually, the idea was come up by Howard Lewis many years ago. It's a monthly 90-minute webzine. It provides material handout. CPE is available for a fee, and it's a great way to stay current in the valuation space. So around the valuation world, let's see, I think that's here. So every month it comes out, you can take a look at the materials and actually get a recording of that if you couldn't catch the live version. So it's a great way to stay on top of the valuation space and what's happening. So there's some additional databases that Titanium includes. Industry and Metro Reports. I think it's now 1,200 industry and Metro Reports. They're historic, but you can look at those and see what, is there an industry or a Metro report that you want to look at? The data may not be current, but the sources could be, and the general analysis could be. So it's absolutely worth taking a look at. There's a database of 9,400 valuation articles. That's worth taking a look at. If I can find them. Business valuation articles. So there's 10,000 articles, and you can come in here and you can search by different things, and you can look at different categories. You can search by title. Once again, there's a detailed search in here where you can look for authors, you can look for Dalbert challenges, and you can look at these articles. Once again, look at the publication. A lot of the BVR ones and some of the other ones are not directly available. If you have, like, for example, a BV subscription, you can go in there and find it. Sometimes they're available as a la carte purchase, but at least it gives you the source and it will tell you where it is. So this is a great source of finding specific articles on different kinds of things. And either the article is here or it'll show you, where to get that article. Federal and state case laws. There's 2,600 cases. And so this is for, more for litigation. Now, obviously, evaluators are not doing the attorney piece of this. but sometimes it's very helpful to be able to provide insight to an attorney on specific things. So for example, if you want to type in here, I don't know, IRS and take a look, you'll see all the different kinds of federal and state case that have IRS in it. You can come in here and see if something's relevant. There's a very quick summary. You can also download the entire case. Once again, it's not really designed for you to use directly, but it's really designed for you to use in cooperation and conjunction with attorney. I've heard many stories of attorneys, a great appreciation for evaluators pointing out something, and then they can obviously dig in and do their thing with it. Conference presentations, this is over 1,000 presentations let's see where those are, conference presentations. So this is conference presentations. So if you want to look for, what did Roger Grabowski say in the 24 NACFA conference about that, you can actually take a look and see the PDFs and all of the, detailed handouts. And many of those things as recordings are available through NACFA, so you can go back to them and find out what's there. So once again, this is a massive amount of content on every presentation that's been, and it's not just NACFA. NACFA is the most recent ones, but there's old IBA ones. If you want to go in there and find out, what did the IBA say about the DMDM method, the direct market approach method, you can go in here and find a presentation with slides. So it's very helpful to do research. It's helpful to go figure out what presentations were available and who was saying what about what kind of things. Compensation data. This is an interesting one. This is coming from the BLS. The BLS data is available online, but it's incredibly difficult to get your arms around. I would encourage you not to go out there directly. But this has a lot of years of compensation data on here. So if you're doing evaluation for 2022, there's a couple of reasons to use this. If you're normalizing comp and you want to get chief executive officer comp, this gives you a data point. If any of you are doing economic damages and you're doing like dollar value of a day, this has every job title in it, not only by state, but also by area in the state. So it's incredibly detailed. So for economic damages, that could be a very helpful kind of a thing. Once again, there's other companies and publications like Dollar Value for a Day, for example, publishes some of this stuff, but it's available as part of the subscription in Key Value Data and BB Data World. And once again, for normalizing for valuation, the data point in here that makes sense is chief executive. S1 filings. S1 filings is an interesting database that many people don't really pay attention to. What this is pre-IPO filings. The reason it's valuable is because it gives you some really detailed information about the industry, about revenue models, SWOT analysis, strengths, weaknesses, threats, opportunities, and sometimes there's a golden nugget in there that will help evaluators. So I encourage you to play with this, look at it. If you're a subscriber, you can find SEC filings, online if you're not a subscriber to Key Value Data or BB Data World. But once again, it's sort of a high-level overview of an industry that can be incredibly helpful. Okay, so let's take a look at First Research. These are the a la carte or level add-on products. So First Research is industry reports, and they do an incredible amount of these. There's hundreds of industries. They update these every year. We have history here too. So you'll notice if you select on this, you can go back. So if you have a valuation that's a couple of years old, obviously you can't use a current industry report for a valuation that's 2 years old. This stuff was not known or knowable. So you can go back and see that kind of stuff. Let's just take a look at one of these and see what it looks like. It's a pretty thorough analysis of the industry. There is some financial data in here too. So once again, it gives you all the highlights and insights about the industry. You can pull the things out that you think make sense, use your expertise to apply it to the valuation, but just know it's there for industry research. Very helpful. You can buy it either by the slice or you can buy an unlimited subscription for a year. BizMiner is a great data set. It does two things. So where's BizMiner? We talked about RMA, and some of the strengths of RMA are the data is completely transparent. There's a rigorous process from everywhere from submitting the financial statements all the way rolling it up into the ratios and common size statements you see. The strength of this one is the amount of data they have. There's I think thousands of industries in here. The market areas get down to individual cities, sometimes MSAs, even zip codes. And there's a lot of categories of data in here in terms of slices of data: small, medium, large, extra large. And so this gives you two pieces of data. One is financial statement benchmarking data. I think here's some of the places they get the data. Once again, one of the things you just need to know about this: they take all of this data and then they apply proprietary methods of computing the results, which are not published. So you have all these data sets and then a proprietary process to create the data. So this is not transparent data, but the good news is there is a ton of it. So if you're looking for data in something in a very specific area, a zip code, you can get it. The other thing that they provide too is market data. So the first thing they produce is this financial statement benchmarking data, which is very similar to RMA. Here's some of the statistics. It's based on 41,000 markets. There's 16 million businesses in here. There's 9,000 industries. So there's a ton of data behind this. The market data is more for things like sales data, market shares, competition, employment data, trends. It can be helpful. It's not directly as applicable as the financial statement data, but you should know that BizMiner has both of those pieces: financial statement data and that market data, which can be useful. I think the last one we're going to cover here is RC reports, reasonable compensation reports. And let's take a look at that. When you're normalizing compensation, you need to figure out what data are you going to use to normalize. RC Report solves that problem by giving you very fast and easy approaches to doing that. They have three different approaches. I'm going to cover the first two. The first one is a cost approach. And what that means is, many times the CEO is doing multiple jobs. In other words, if they're spending their time on marketing, finance, inventory management, and those kind of things, your compensation can be related to those different tasks. So in other words, you can fill out what those tasks are, fill out some other things, and it will give you a normalized compensation based on a cost approach, which is kind of an interesting and unique approach. But it's pretty realistic because CEOs, especially if smaller businesses, are doing many things, and it gives you something that you can use to normalize compensation. The other one it uses is more of a market approach. Obviously, there's a ton of salary surveys out there. So what this does is it's relying on salary surveys to give you that same kind of information. So you put in some information about your target company and target CEO and the industry, and it will come out and show you based on also here is Chicago, Illinois, national. It'll give you that kind of stuff, and it'll give you a lot of detail, and you can use this very quickly to come up with something that is a good estimate of compensation, and also gives you a way to defend how that data was calculated. You can rely on them to do it, and many people use that. You can all use this in your tax practice too if you're looking to come up with normalized compensation. So wow, I'm out of breath. 23 databases in 50 minutes. So remember some resources. BV Data University is a great place. I can send you some things if you want them. I can send you the DLOM guide, a National Economic Report sample, a first research sample. You can email me at dfine@valuesource.com. You can also visit our website, valuesource.com/C-samples, to get some samples. We have samples of all of our databases out there. Since you're on the webinar today, we have a special offer. We'll give you $300 off a Titanium subscription, which includes everything except those three add-ons: First Research, RC Reports, and BizMiner. And that's for new subscribers. So if you buy it by November 6th, we'll give you $300 off. You can call us at 719-548-4900 or email us at sales@valuesource.com. And if you have any questions, feel free. I've got my chat up. You can type something in the chat if you've got any questions, and I'd be happy to answer those. Let me give you my contact information too. My contact information is dfine@valuesource.com. My direct phone number is 719-799-6025. So that was sort of the fire hose version of databases, but you can see there's a lot of interesting sources. There's a lot of nuances in there. And even if you don't use them, you should know about all of them, and you should understand, how they apply, especially if you're in litigation. It's really important to know what maybe the other side could be using for some of these data sources, and also what some of the strengths and weaknesses are. Many people use these things and they really don't understand strengths and weaknesses. And if you understand it, it sort of gives you a leg up. Also helps you with your attorney in looking at, did they use stuff appropriately? Did they understand the strengths and weaknesses? Did they overuse it? Those kind of things. So it's 2 o'clock. It's a little more than 50 minutes. But thank you all for showing up for this webinar. I appreciate your time. And like I said, if you have any questions, please feel free to let us know. Or if you want to take a look at any of these databases yourself. And once again, go take a look at bbdatauniversity.com. I think you'll find some interesting stuff out there. There's a lot of databases that we don't sell, but they're very interesting in the valuation space.